My name is Mike Sullivan. I'm a former IRS agent. I was a teaching instructor while I was there. I wrote a book about, not selling the book, exposing secrets for IRS settlements. I've worked thousands of cases. I'd like to pass information on to people. I am available for representation, just so you know, on larger cases. When you give IRS a financial statement, a 433F, the one the service center uses, a 433A, the one that the revenue officer uses in the local office, or the 433 AOIC. There are two really main components of this. I have reviewed thousands. Obviously, people have sent me a lot to review. So as an agent, first of all, I fix my eyes on everything on that. I know every single check mark on every financial statement because I know where to look. I know what's going to get the IRS interest. The two areas you got to be really cognizant of is what are the value of assets? Is it a good value? I can find out whether you're lying to me generally by looking at the value you've assigned certain assets. When you look at them so long, I'm looking at a house, I'm looking at a car, I'm looking at personal items. There's just things that you look at. So the assets you put down and the values are really important to me. So make sure they're pretty spot on. Remember, IRS in real estate will use Zillow. IRS will ask for statement values, so make sure those are all spot on because IRS will ask you for that documentation. The other thing they're looking at is income and expenses, whether it's business income, business expenses, personal income, personal expenses. IRS, if you owe IRS debt, IRS wants money from you. And when they want that money, what they're checking on, the income, of course, can be verified. IRS wants the last 3 or 6 months. That's going to be found in bank statements or credit charges or whatever. But your expenses are going to drive how IRS is going to deal with you. The IRS agent has to keep in mind that they know and there's a lock on what expenses they allow and don't. So if you're going to give IRS a financial statement, say you're not using a professional like me, make sure you understand these expenses are really critical because IRS is going to want them documented. Make sure you also understand that when you put your personal expenses down, IRS uses the Department of Labor statistics, not your statistics, for 4 categories: food and clothing, housing and utilities, car payments, and car expenses. They're going to boot yours out, put yours in, and that changes the entire financial statement. So if you have a large dollar case and you're giving IRS, that's my dog, by the way. Don't think there's a squirrel in my house. I can't tell you how important the expense side is. Study the IRS national standards. Where you live, there is a county by county expense for housing and utilities. IRS is looking at the whole thing. Remember, no matter what, they want money on a monthly basis. If you can liquidate some assets and pay them off, all the better. So I've looked at thousands of these cases. Your financial statement drives your settlement with IRS. You must know that. You must know this. Give me a subscription. I'm not selling my book, but I'll put it up for time. Anyway, thank you for listening. I always tell you the truth. Subscriptions are great. Thank you so much.